Eric Mwadet, Mwadet.com, with a follow-up of the previous video from about an hour ago. And here we are seeing the Dow coming off the highs for the day. In fact, the Dow did go up as much as 245, I believe, somewhere in the 240s. And now we can see that the things that we were looking at were accurate, because the market has come off the highs, now up about 159 within the last hour and a half. And it all makes sense, because if you go back to our two lines, as of right now, we are seeing that this is again rejection. That rejection also happens to be at about RSI 50. Keep in mind, we are trading in a market that has been generally on a downward spiral. So really, it needs a lot of work to do before it can convince people that it is about to move higher. So we are looking for any evidence that the market might stall. So that was resistance there. As of right now, the market has opted to take that resistance level. And so we know that until such a time that the market clears this very well defined line here, until such a time that the market can move above that line, we have to assume that we are looking at markets that are still under some type of downward spiral and resistance. So until we can move above the blue line for now, we really suspect that the market continues to struggle. We also come back here, and the other line that we were watching was the line connecting the previous break line coming into this year. And again, we are looking at the market showing signs of resistance around this level. So the more it confirms that it is stalling around current levels, the more we are convinced that we might see another test maybe of this lows somewhere here. So the more we are seeing resistance, the more we start speculating that we might see some type of a test of the current lows. Now, if you go back to your positions, for example, DUG, which has really pulled back. If we take a look at the hourly here, if you remember the last time we were thinking of taking some money off the table a couple of days back, because we noticed that it was forming a negative divergence. And so in the hundreds here, we were discussing taking some money off the table. I think it's come back to a level where we can start looking to add, or at least consider not getting out, because if you draw a line somewhere around there, now this line conveniently just happens to be above 38.2, and we can see that if we use that line, we can see we get areas where the market has been holding the stock. Here we started moving at a price of about 55. We held during the lows here, we held during the lows here, again we held with uniform action during the lows here, and now we've touched that line and are showing evidence of wanting to move higher. So somebody can add here and set a stop, because it is holding exactly where it needs to. Now I need to mention here that while I did not mention this earlier, I'd like to take a look at the FTSE, which is live chart right now, showing nice support for the week. And we can see here that we cannot really also be ignorant of the fact that some of the charts on the weekly on world markets are starting to improve. So that's the weekly. Take a look at the daily, and the daily is also showing a slight improvement, because we made a lower low in price, but the technicals did not close, or did not actually go below 30.9. So we are seeing some improvement. Now the problem is, if we take a look at the hourly, and I'd looked at this in the European markets early in the morning when the Dow was up I think 250 points, and I'd noticed that the FTSE was stalling around where the RSI has been running into problems, somewhere around there. You can see the break of this level here brought the market off the highs there. There was another break of that trend line here. That trend line break also corresponds with the break around the red line for the highs there, and we had come back to this level. So my suspicion was it would make sense if the market was to pull back around current levels. If you take a look at the 30-minute chart, and what I'm getting at here is, it is good practice to check with other markets, other sectors, to see whether what you're looking at is across the board. We can see here on the 30-minute chart also resistance here for the highs there, and now we are seeing resistance there, and again conveniently just happens to be at about 61.8 on this 30-minute chart. So we can see here, if you really scan or zoom in, you'll see that it is actually looks like a double top on that red line. Now, going back to the other ideas that you own, which are short, let's take a look at EEV, which has come off the highs. And of course, we've discussed the idea that around here, if it stalls, you know, there was a line, two lines. Line number one, we can draw it this way. In fact, you know what, let's take that off because that's going to be a little confusing. Let's go to where it broke down off the highs here in the 30s, pull back all the way to the 20. That's a 50% drop, and we can see that that's where the RSI broke down here to kill the trend in the mid 20s here. So we can see that if this becomes resistance on a week-to-week basis, this is probably telling us it could stall. Let's not forget that there's also here an intraday high that the market right now has failed to hold. So there's another red flag on the EEV. Take a look at the hourly though, and this is so raises a question in the hourly, because we've come back to test off the lows here. The market had moved above this RSI range for the entry there in the lower 20s. The stock would go on to gain a nice chunk of return in a short period, and so we draw a line from here right there. So that right now is being tested, and if it holds, then that is where you want to add, or at least this is where you realize that you don't have to get out of any position you have left. Take a look at EUM. Oh, by the way, before I stress that, before I go on, let me remind ourselves here, for the sake of understanding why we are using the hourly charts, is because the VIX is trading at 24, and as VIX is trading above 24 in the 20s, we have to pay more attention to the smaller time frame because they tend to be market moving more than usual. So we can see here also EUM, similarly to that of EEV, coming back to test the breakout level. Now this is how you do it on a short-term basis. So we can see that we had moved above this wedge. There was a short-term wedge here, and that RSI breakout of the wedge was at about 29. And so we can see that if we draw a line here down the road, should the market ever come and test that line with uniform activity, we consider that a place to add, or at least evidence to hold. And we are seeing that it is holding. I'm not doing this, you are not doing this, the market is doing this on its own accord, which means we have to respect that. So for now, looks like the evidence is more and more to not panic out of the situations, and just make sure we monitor this, because now we know for a fact that if the market was to come back and break below this line that wants to be support, if we see this crack below that green line, then that might be evidence that the market is due for some type of a move higher. So this gives the idea that the market might hold here on EUM and potential to move higher. So it's a place to add. On the other hand, if we break through this recent low and if we break through the green line, then this is probably suggesting that this is not working out. Now, for the day, want to take a look at, let's take a look at the main markets. Go back for the day, and I want to look at the daily chart. We can see that the Nasdaq today is moving above 30.9, which suggests that this is going to be a big up day. It is already a big up day net. Chances of a reversal become diminished. It's not impossible, but they become diminished whenever markets are moving above 30.9. And we see when you're moving above 30.9, you're getting this nice gain. Okay, so that's something to watch here. And because we're using the hourly, now the question becomes, what do we do with the current move? And what I could suggest is probably the market is coming back eventually to test this line here, which was the recent break line. So this was the break line coming into January of 2016. Until the market can move above this break line, we still have to hold this market as being suspect until it can prove itself otherwise. Take a look at Dow Jones on the daily. Now the Dow Jones was already above 30.9, excuse me. Coming into today, it was at 31.2, I believe. So we are seeing a nice day here. And keep in mind, here also we are seeing the same type. We can also have the same conclusion. At some point, the market is going to come back to test the break line coming into late 2015, early 2016. And until we can move above this red line, we can still look at the market as being suspect. I need to point out here also another reason why we can still continue being a little bit on the bearish side is quite frankly because we are looking at the MACDs still trading below zero. When your MACDs are below zero, it tends to suggest that the average gain or the average move is to the downside, even though you get spikes here and there. We take a look at SPX next. And what we have here also is S&P 500 holding and jumping nicely above 30.9. So for the day, it looks like the Nasdaq is telling us that the market looks like it's going to hold on to these gains if it wants to do so. The RSI is above 30.9. Take a look at the Dow Transport on the daily. So Dow Transports, even right now, Dow Transport's having a nice session, moving above 30.9, suggesting a big up day might make sense. We go to take a look at the hourly. And the reason why we take a look at the hourly here is we are seeing this market having broken down, has been bearish over the last 2 months, or fresh bearishness since it made the highs in late 2014, and 2015 was a down year, and we are seeing continuation of this move. So the Dow Transports are still bearish. We haven't seen any monthly gain, and so we can start looking for buy signals. So we know that the big picture is bearish. We take a look at the weekly for the Dow Transports, and they are doing the best here, moving above 30.9 on the weekly is a good sign of a market that wants to recover, so that's good. But let's take a look at the hourly. And short term, we are seeing the hourly running into problems, because if we draw a line which is slightly above 50, somewhere there, and this line here gives us short-term highs there, resistance with uniform activity above the line back below it. So once you move below the red line, you get that sell signal there, resistance here for the highs somewhere there. So we can see we've come back and we're doing the same thing. All to say, as of right now, with the chance of this moving below 50, if it moves below 50 on the hourly chart, it suggests that markets might pull back even deeper than the current move off the high. So all these things point to adding on to those short positions. That's my thesis for now, and of course you can add on to those positions with a stop and see how things go. Eric Mwadhe.com. Let me know if you have any questions or if you have any input. Good luck as always. Peace and blessings. ETFs. Woo! Yeah. Mwah.